Hey guys. Alrighty, so we got our CPI today, and man, what a day. I've been trading for quite a while now, and I think I've seen a lot of weird stuff. Just a lot of market reactions that you're like, that doesn't really make a lot of sense, or I'm not really sure why we did that, or even back in 2022 when we had our huge rally, even though CPI just back in October off that like 340s low and stuff like that, some of those things were just massive moves, and you're just like, man, that doesn't make sense. Back then markets were pricing in, at that time, a pause, a year in advance, basically. So today we got the CPI numbers. Now we end up coming in at year over year at 3.4%. That was a 0.3% rise over previous and was 0.2% hotter than forecasted. We got month over month at 0.3%, which came in at forecast and was unchanged from previous. Core year over year came in at 3.9%, which was 0.1% lower than previous, but was 0.1% hotter than forecast. CPI, CPI at month over month came in at 0.3%. That was a 0.2% rise over previous and 0.1% hotter. So looking at these numbers, we had the initial bearish reaction, which makes complete sense. We got hotter than expected. Not only did we get hotter than previous, but we also got hotter than expected year over year and month over month CPI. That's a big deal. This essentially is the first time since February 2023 that both readings were higher than expected. It's the first time since September 2023 that inflation has been back on the rise. So you would think inflation's rising, that means markets going to realize, hey, you know what? We aren't going to get these rate cuts that we're expecting. You would expect wrong. I was wrong. I thought, and you know what? I would say I was right in that I expected a big change in numbers to happen after CPI. However, I was wrong in my expectations. I thought markets would get humbled here. I really thought we would see the expectations for the March rate cut to drop. I thought for sure we would see, maybe even price in only 5 rate cuts for 2024. But markets said, no, we're actually going to increase the odds of rate cuts. So the March odds of a rate cut went up by almost 6%. The May rate cut odds went up by 10%. The June rate cut odds went up by 10%. We had a 14% rise in rate cut odds for July. We had almost a 20% rise in rate cut odds for September. And then looking at November, that's pretty unchanged. But then December, we had a little bit about a 3% rise of a rate cut. So markets basically reinforce that, no, we think the Fed is going to cut, which is incredible because there is no world outside of, and this is my maybe little expectation, is that somewhere big money knows that something is going to break in the economy. If you think about it, the only way the Fed would cut rates with inflation not at their 2% goal, or at least on the rise, would be if the economy breaks. So there is a chance that big money is saying, hey, I think, or we think, something's going to break and the Fed's going to be forced to cut anyways. And again, that is not bullish. If the Fed is forced to cut because of a bank collapsing or because something else in the economy collapses or whatever else, another housing housing fiasco like '08, that's not bullish, that's bad. So I'm shocked by today. I am very, very curious how markets are going to react overnight. A lot of times, these CPI days, especially, and even FOMC days, we have a bit of a delayed reaction to the data, and sometimes we will see the next day markets finally get it right. So there is a chance that tomorrow we could see markets come back and say, you know what, we messed up, and we can see these odds drop again. Could see a big gap down overnight, but right now, honestly, man, it's hard not being bullish. I gotta say that. So let's take a look at SPY here. Looking at the daily candle here, this is a really nice hammer candle. So the way I read this price action is that we attempted to break down. We basically held the daily 8 EMA support and bounced aggressively. So, you know, to say here that this is a bearish pattern, I would beg to differ that this is a bullish bounce. So now one thing I will say, if we go back to the 4th and the 5th, we basically had the inverse of these candles, and same thing here on the 29th before we trended down. So now the range is still holding. So our range is still 476.86 to 478.15. We almost got a new daily supply today when we were closed down by the 8 EMA here. So basically, two scenarios is either bulls need to close over 478.15 and get a new all-time highs, which we again at close about $3 and some change, 50 cents or something like that, away from all-time highs. And that would be a bullish breakout. Or bears are going to close under the 8 EMA support at 473.8, get a new supply up here, and then we're going to be revisiting 467.41. Going over to ES, kind of the same thing here. You know, we actually have a nice double top right here at 48.20. We failed to break through. We hard rejected off 48.36 supply, which is our upper resistance here. So, you know, this could be a 1, 2, 3 move back down to 47.32 demand. Again, we could get a new supply here, which would be bearish, and that would open up the potential to come lower. And even back here on the 19th and 20th, you can see this same area, this 48.19 to 48.20 was resistance. So, you know, really it could play out either way. We either need to close over 48.36 or realistically somewhere under 47.90 tomorrow. Going over to the Qs, same thing here. You can see, you know, we couldn't even quite get to 411.52, but we have that same hammer candle, which again looks like a bullish bounce off support to push up. But you can see that, you know, we've had these candles in the inverse of that, and that actually results in a downside move. So, you know, really until we close over 411.52, I'm neutrally bullish. I feel like this is a bullish pattern, but again, we need to get over that supply and that resistance. But again, I would not be bearish until we realistically close back under 405.5, which is the daily 8 EMA support. Looking at NQ here, same thing. We got the nice double top right here at 16,958. And again, you know, this could turn into a new supply, and that would take us right back to 16,456. But if this is our bounce and we push up, our target would then be 17,130. If we closed over that, we would get a new 52-week high, and that would be bullish, and that could lead to quite the breakout here. Now, when we look at the VIX again, it's doing its own thing. For some of the day when we were at low a day and we were pushing down and we looked very bearish, I was on board with the VIX finally. I thought the VIX finally was showing what we've been waiting for with a proper reaction. However, as you see here, it got absolutely slammed to the downside and ended up closing down almost 2% while the markets also closed down red. So, you know, again, the VIX is not a lot of help here. I would have liked to seen a green day on the VIX with a red day on the markets, and that would have made sense. Now, we are sitting at our 12.08 and 12.43 double demand support area. So there is potential this is going to hold and we will push back up. Same thing, we almost have the inverse of the daily candle on SPY here on the VIX. So there's a potential we could see a big gap down on markets tomorrow and gap up on the VIX tomorrow, which again would be the markets properly digesting essentially what happened overnight. So, or today with the CPI data and stuff. Tomorrow is going to be an interesting day. When we look at the weekly candles, just as like a little heads up here, we could get a new daily demand or weekly demand here, which with this being a 8 EMA bounce, and if we can close over that 48.20 area, this actually could turn into a new demand with a bullish engulfing candle that breaks us out massively to the upside. Looking at NQ, we have the same thing. We could get the new weekly demand off the 8 EMA, bullish engulf if we close over 17,025, and massively break out to the upside. Now, again, do I think we need to be breaking out? Do I think that the markets have this right? No, but markets, trading is not always about trading what you feel is right. If you look at the last 2 years of trading now with this bear market and into the new bull market, there's been plenty of times where you're like, yeah, that doesn't make sense, or I don't think we should be rallying, or why are markets rallying, or why did we dump so much on that, or why didn't we continue to go whatever way? When we day trade, which that's the thing I love about day trading too, is that I don't really care what happens a lot of the time. Now, of course, I do these videos for you guys, and I have my daily trends and targets, which does help me guide me intraday. But for the most part, like when I'm intraday trading, I forget about everything. All I'm looking at is my 1, 5, and 15-minute chart. I'm looking at what's happening right in front of me on those candles. Are we pushing over EMAs? Are we pushing under? Who's leading who? Who's in charge? Who's not in charge? At the end of the day, yeah, it matters what the big macro's doing because, during this time period, obviously we were so bullish, it's hard not to just want to play upside, and it would be unwise to think everything's going to short. And even today, today's a great example of it looked like we were going to continue to go to the downside, that we were just getting a healthy retrace. All of a sudden, we get a massive reversal. So, playing the intraday is so nice for that reason, is that we don't have to worry about everything else. So again, markets are going to do what markets want to do. The market, something that humbled me, I think, in 2023 and end of 2022 is that the market is not the economy, which means that just because the economy is struggling or inflation is struggling, that doesn't mean that markets have to struggle either. So we can have a strong market, but a terrible economy. You can have a terrible economy or a strong economy, but a terrible market. So, that's something to keep in mind as we are pushing forward here, as we are trying to figure out what's going to happen next. But the next big thing to look forward to is FOMC on the 31st of January. I think that is going to be spicy. I think that J Powell is going to try to humble in a hawkish way this market, but who knows? Markets could just say, nah, we aren't going to believe you again. So, I'm very curious to see where this market goes here, though. So, but all right, guys, I hope you guys had a great day trading today. I will not be here tomorrow or making a video tomorrow like usual on the weekend. And I will not have my weekly TA up tomorrow. I'll be out of town. I'm going to try to post it Saturday night if all goes well. And then Monday's markets closed Monday. Remember that. And then Tuesday, I will not be here at all. I won't be trading or anything like that. And then I will have a TA up Tuesday, and then Wednesday I'll be back to my normal trading and all that jazz. So, but all right, guys, I hope you guys have a great night, and I'll see you guys tomorrow.